What is going on, investors? Hopefully you guys are having a wonderful day out there. It is time to talk about Bank of America Corporation, ticker symbol BAC. The company just reported their Q4 and full year earnings. We will get into them. We'll take a look at the loan growth. We've covered two other banks here during the earnings season. We looked at JP Morgan. We looked at Wells Fargo. They actually saw their lending divisions actually contract, so less loans than a year ago. Bank of America is actually seeing the opposite. So really interesting from kind of a macro environment perspective. Take a look at the balance sheet over at Bank of America. We'll take a look at this from a valuation perspective as well. We'll take a look at the profits, how this company is doing from a revenue perspective, but also controlling those expenses and driving those profits as well. Now, about 3 months ago on the last quarterly earnings report was back in October of last year, and I put a little arrow here showing you where the stock traded at. I said this stock was overvalued on our last video. Well, it kept going up. It went from about $45, $46 per share as high as almost $50 per share, excuse me, but we've pulled all the way back literally basically to the number where we were 3 months ago. So we'll talk about, is this stock still overvalued? The fact that they've bolted on a little bit more revenue growth, they've bolted on some share buybacks, they've upped that dividend. So we'll talk about this from a valuation perspective and see where we sit with Bank of America. Now, over the last year, stock's up 40%. That's absolutely fantastic, and that's on the heels of these Q4 earnings, which came in with revenue coming in the quarter, $22 billion. And so we'll show it here. So we have this $22 billion in this fourth quarter, and that is up about 9%, actually roughly 10% over our fourth quarter of last year. We're sitting at about $20 billion. Now, from the full year, we went from $85 billion up to this $89 billion. Now, what we also saw last year in 2020 was just a massive stacking up of cash from all the banks, but Bank of America in particular, set aside money for provision for credit losses. So obviously 2020, I don't need to describe to you what happened that year. And a lot of people and a lot of businesses had some uncertain financial futures. But what ended up happening is the United States government really poured a ton of money into people's pockets in the form of unemployment, PPP loans, different types of stimulus checks, just straight cash dumped into your balance sheet, into your bank account, excuse me. Well, that bolstered up the economy and certainly the balance sheet of consumers. And so what we saw is last year, Bank of America set aside $11 billion for credit losses. What they found were consumers didn't need it. And so what they're releasing that money. They released about $4.6 billion back into the company, believing that they're not going to have that money set aside for credit losses. That, as you guessed, would bolster up your net income. So you have your revenue for the full year coming in at $89 billion. That's up about $4 billion, or about $3.6 billion to be exact, over last year. But your non-interest expense went from 55 up to 59. So you actually increased your expenses by about $4 billion. But notice our income before income taxes went from $18.9 billion all the way up to $34 billion. And again, why? Because look, our revenue only went up $4 billion, but that is basically canceled out by our interest. Our expenses went up by about the same amount, but because instead of putting aside $11 billion for credit losses, we actually got to receive. We actually took that out of the bank, so to speak, and put that back into the company's financials. We actually took back $4.6 billion. So that's where you get this strong income from operations from $34 billion up from about $19 billion in the previous period. Now you pay some income taxes and some dividends. You come here to net income all the way up to $30 billion, nearly double where you were last year at about $16 billion. Again, all of that due primarily to the fact that you had these provision for credit losses, which was positive $11 billion. This year, it's a credit of $4.6 billion. You did see an execution of buybacks. The Fed put a halt to that last year. That got lifted, and companies in this good a financial position and churning out record amounts of net income, well, guess what they're allowed to do? They're starting to buy back shares. You went from 8.7 million outstanding shares down to about 8.5 over at Bank of America. Now, what I wanted to show you is if you've been watching our videos on the banks, you saw Wells Fargo. We saw real estate loans. We saw auto loans. We saw all that contract track. Same thing at JP Morgan. Different story over at Bank of America. So whether or not maybe they're being a little bit more aggressive on their terms, their marketing, I don't know what it is, but they're actually seeing loan growth on the commercial side, 8%. You're seeing consumer growth also up 3%. Total loans up 6%. That's exactly what you want to see in a rising rate environment. Obviously, we know the Federal Reserve is likely to raise rates several times this year. I think at least 3 times is the prediction. My guess is you'll probably become anywhere from 2 to 4 interest rate hikes when you're growing your loans as well at the same time. That's absolutely fantastic. Now, the other thing that is fantastic for Bank of America is take a look. These figures are in billions. You rarely see that, right? Usually it's in millions. These are in billions. So here we go. We got total deposits, and there's a reason why we're focusing on this, is take a look at the year end. You had 2 trillion. That's not 2 billion. That's 2 trillion with a T in deposits, because again, we talked about how the consumer is just so healthy. They've just deposited over the last quarter. They deposited over 280 billion, or up 16% to $2 trillion in deposits. Why are we emphasizing that? Is because Bank of America is going to take that money, and what does a traditional bank do? They take deposits and then they go lend it out. The fact that they're expanding and increasing their commercial loans, consumer loans, and overall by 6%, that is a positive. And this company has just records amounts of money on deposit right now at over $2 trillion. Last year in this time, we're sitting at 1.8 trillion. Just last quarter, you were at 1.96 trillion. Consumers are just pouring money into the bank. We've got to expect at some point that reverses to a certain degree. 2 ways this can reverse. The customers can just pull this money out and then go spend it. What will that do? That could spur business lending growth. So consumers go out there and spend. Commercial businesses need to buy inventory. They need to make more stores. They need to make things. And so that will spur lending on that side. The other thing that consumers could do is they could say, man, I feel really rich. We've got $2 trillion in deposit. I'm going to go buy a new car. I'm going to go buy a new house. I'm going to do an addition on my house and do a home equity line of credit. Those types of things. That is what we could see if things continue to go well. With this amount on deposits and interest rates rising, there could be a reason why, from a traditional valuation perspective, Bank of America is wildly, I'm telling you, wildly overvalued. They tell you down here the tangible book value per common share, which is, I don't typically look at a lot of PE ratios, price to sales ratio. You'll notice here on the channel, we don't talk about that a lot. And the reason is, if investing was as simple as looking at a ratio and making a decision, I guarantee you everybody in the country could be rich and would be rich. Investing is not that simple, okay? The markets are sometimes a little bit irrational, depending on what they're looking at from a valuation perspective. But when we look at traditional valuation metrics, when it comes to bank, the one I tend to focus on is the tangible book value per common share. This is as if you were to liquidate it. Every asset that Bank of America has, they would have in value for you, the shareholder, $21.68 in assets. Right now, the current price at Bank of America is $46 per share. And so yes, you guessed it, you're paying over 2 times tangible book. That's what this graph is. You're paying a record high price. I have a 3-year chart on this. We could probably stretch this out to 5 years. Yeah, you might be able to stretch this out even to 10 years. You're paying a record price for Bank of America's assets. But what I described to you could be a reason for that. Okay, there is a reason for this. There's a little bit of froth in the market. We see that there's plenty of cash on people's balance sheets, and there's plenty of room in their balance sheet to buy stocks. But the other thing that I think investors are anticipating are the interest rates rising at some point, and a company like Bank of America just has a ton on deposit that they're going to be able to loan out to a certain degree. And so you get increased loan rates, you get increased loans, that can increase profits, and in turn, that will increase the tangible book value over at Bank of America. So I think in some ways, investors are kind of front running this to a certain degree from a valuation perspective. But we are at the same point. I have this little arrow here. Like I said, this was back when the company reported earnings back in October. We're basically back to where this stock was. Now, we are in a very nice uptrend. I have this green line, this blue line here. I'm a little colorblind this morning. We got this blue line that I'm kind of waving around right now. now, that is in a solid uptrend. Obviously, I don't need to point out the fact that this stock has just been rocketing up this line, but we are now pulling back to it. Could create a nice buying opportunity. You do have a level down here at $44 per share, which were some previous highs, but also where the stock consolidated very nicely for like a whole month. The stock consolidated right between, like in a real tight range between about basically $44, $45 per share. If we pull back into that range, the stock is currently sitting at about $46.53. That can be an excellent buying opportunity. You might say, well, if we pull back down here to 43, well, this uptrend is broken. Not necessarily. You can flatten these out. The other thing is you can just move it. Okay. That's why I don't love these vertical trend lines. It's just to give you an idea. Well, this stock is locked in this uptrend. Okay. And if it does pull back to this area of $44 per share, not that big of a deal. I think the other thing that could happen with a lot of stocks, not just Bank of America, but I think a lot of stocks, we might have seen kind of a peak in valuations on these stocks. The other thing that we could do is just simply go sideways. Okay. There's a couple levels here where we could go sideways. The real downside, the bottom of it, not necessarily the bottom, I would say the bottom of it's down here about $38 per share, but you got a level out here about $40 per share. Okay. And you've got kind of a top up here at about $48 per share, more specifically up here at 50. I could see Bank of America just kind of chopping in this range. Okay. And so if we pull back down here to 44, I think that can create a buying opportunity. If it gets south of that, I think it can create a buying opportunity as well. But based on the traditional valuation metric of tangible book value, you're paying a record high price for these assets over at Bank of America, but they are executing. In order to pay a premium valuation, you need loan growth to continue to accelerate. You need interest rates to go up. And then we eventually need this $2 trillion in deposits to be monetized in a lot of different ways. And I think that is possible. I'm not 100% sure it's possible, but if you continue to see improvement in the United States economy, you get an improvement on the health situation that we have. We obviously are all praying for that. If we do turn the corner there, companies like Bank of America can be well positioned. You also have a buyback. You have a dividend here, which is relatively small, but you get the combination of dividend hikes and buybacks, certainly beneficial for Bank of America shareholders as well. Hopefully you guys enjoyed this video. Back again soon with more this week. Good luck with your investments.